Do you want your business to grow faster? Are you open to new and out-of-the-box ways to drive revenues and increase value? How do you imagine the most successful entrepreneurs and business leaders double, triple, or expand their businesses tenfold or more? The answer is deals. This is a weekly podcast featuring conversations with business owners, executives, and leaders as we reveal behind-the-scenes details that give you, our listeners, the confidence to pursue your own deal-driven growth. On the show, we discuss a huge variety of deals, everything from large, complex mergers and acquisitions to smaller deals that you can do even without significant capital. My name is Corey Kupfer, and I've been supporting deal-driven growth for businesses for 35 years as a successful entrepreneur, professional negotiator, and attorney. My goal is to help you strategize, plan for, find, and complete deals that will help your company grow faster. Welcome to the Deal Quest podcast. Let's get started. Hey, folks. So on this solo cast, I want to talk about 2021 to date. Really, usually I'll try to do something mid-year. We're a little coming on actually almost 3/4 of the way through the year here by the time this thing's going to air. But it's interesting to look at the trends, the M&A trends that are happening this year. I've done at least end-of-year reports in prior years. And listen, it's really, really interesting. I mean, as you know, if you listen to this podcast, the last year, even during a pandemic in 2020, deals continue to be strong. Obviously, I've talked a lot about this K economy, where it's very different depending upon industries, but there were enough industries, in terms of financial services and tech and logistics and various others where deals were strong last year. Well, this year as well. I mean, if you look at any of the reports, PwC or Bain or, JP Morgan or Morgan Stanley or the publications, Fortune, I mean, you can just search 2021, deals, and you're going to find all of these reports that are generally very positive. I mean, obviously, there's some sectors that are still recovering a bit, but the combination of strong stock market, right, that continues to create confidence in people for the economy. We can have a discussion on whether it should or shouldn't, or whether people think that's less. But the impact has been that has made people be confident in business growth and deals. Access to capital. I mean, there's unbelievable amount of capital that's still available. I talked about this, I think, in some detail at the year-end 2020. Report. While the capital, availability has not dried up in any way whatsoever, even though there's been a lot of capital that's gone into deals and been invested already. There's still almost unlimited capital. I mean, I tell people in a lot of my segments that sectors that we work in, that there's no good deal that can't be funded these days, and that's pretty much true. And I'm not just saying finding a funding source. I mean, having multiple options, right? Equity funders, debt funders, minority investors, majority investors, partners, that kind of stuff. So that continues to be the case. Interest rates continue to be low, even though, there's some push a little bit on inflation. Interest rates seem low. We can have a debate on whether we're in the start of an inflationary period, or whether some people think that there's a blip just because coming out of the pandemic, people had reduced prices. Now they're going up, and or they're looking to make up some money, and or wage costs, labor cost has gone up because it's hard to find people. So there is a little bit of inflationary pressure. Whether that's going to impact things in the future is anybody's call. We all can have an opinion on it, but I found the opinions, particularly in the future, are tough. But the point is, today, that has not put a damper in any way, really, on deals. So it's a strong time. It's a strong time for M&A. And then when we add in, I did a couple of solocasts recently on the potential change in capital gains treatment. Well, we've definitely seen a number of folks. We have a number of clients who are looking to get deals done this year, just in case cap gains go up. Federally, and even in some states. So for example, states have talked about, various states have talked about potentially raising taxes to gain some revenue. But specifically, for example, in Washington State, Washington State never had a capital gains tax at all, and they'll be adding one next year. So for folks in Washington State, whether the federal government or not, change the capital gains or not, they're going to have an increase. So I've actually got a couple clients we're working on, definitely looking to close deals in Washington State before the end of the year, but even in other places because of the uncertainty. So we talked about that. So there's a lot of drivers for deals to get done, continuing this year. And, frankly, at this point, there's nothing in sight that would make it seem like that's going to slow down. Now, you would say if people are pushing to get deals done this year for capital gains purposes, maybe, there'll be a slowdown next year. It's possible. But I think so far the fundamental factors, because I don't think tax policy is the biggest driver. I think it's really just the economy and low interest rates and availability of capital, and the fact that there are just some very active buyers out there in various segments that is causing it. So listen, there's always can be a black swan event, as they call them. You never know what's going to happen. But right now the indicators are strong, and it's interesting to see the sort of thought process of entrepreneurs. It's always a decision if you've built a company that is now as valuable in a particular industry, and valuations are high. I mean, I was just we have a deal going on for a client in a small. Well, actually, there's two in for example the wealth management space, with the multiples that they're getting. They're both selling. One is down the line, and another is earlier stage. But the multiples that seem to be on the table are almost double what they would have gotten in historically. That's tempting, right? It's tempting. Now, obviously, in one of it's interesting, these two deals that I'm thinking about, one of them is a situation where it is a succession solution. They're looking to retire over the next couple of few years. Another one is a situation where the client believes that there's more growth opportunity, hooking onto a bigger entity that has significant growth plans that just got private equity money involved. Excuse me. And they can be, we actually have a couple of these where they're going to be, these clients are going to be the hub in a particular geographic area for these aggregators with private equity money, to grow. So they're going to tuck other firms into the hub. So there's an advantage of getting in sort of early and being that geographic sort of starter, initial foothold, where then the aggregator that is a private equity funding is going to put more and more into your hub, and you're going to benefit from that along with them because you're going to have some equity in the bigger company. So we see a lot of this going on. We're busy. I will tell you something that I think I heard recently for the first time, maybe in my career. I mean, there's been other times that have been busy, but I just had a couple of clients tell me that, they were prospects that were referred to me, right? So they were, considering my firm and other firms, who told me that there were, in one case it was one, in another case it was actually, I think 2 or 3 firms that they spoke to who said they were too busy, law firms, too busy to take on additional deals, which is amazing to me. I mean, not that, listen, I mean, we don't take on, in concept, I wouldn't take on anything if I was too busy. We're not going to take on the work. I mean, I respect those firms that said that they were too busy to take on the work, because it's much better than taking on the work and not being able to properly service the client. Now, I've built a model where I have access of counsel attorneys who are available to me as needed, so we can expand sort of a contract as needed. And despite the fact that we are very busy and doing more deals than ever, I can add capacity to do additional deals. So that's fortunate. But my point more so is that it's sort of a sign of the times. I mean, when you got professionals who are saying they're too busy to take on additional work, you don't see that all that often. Usually people will figure out how to staff up, to handle growth, because obviously that's revenue and profit opportunities. So that's another sign. In terms of sectors, I've talked about this before. We do a lot in financial services and tech. Both those sectors are booming. For obvious reasons, healthcare sectors. There's a lot going on there, and I think last year, while healthcare was obviously, and they still are, but not quite as much, having to be focused on actually dealing with the pandemic. Now there's the start of more activity in that sector as people are able to take a little bit of a step back, and also as they're looking at the impact of things like these pandemics on their business models, and looking for different opportunities to be able to better service or be more profitable, and in any kind of challenging or changing market, there's always opportunities for deals. So you see people looking at that. And it's interesting because this is not just true in the U.S. If you look at some of those reports that I alluded to before, they also analyze things internationally, and deals are up and busy internationally as well. It's not just in the U.S. So overall, you see significant deal activity around the world, and there's some stats that on the mega deal side, right? The really, really big deals that we're talking about, multiple billions and billions. Those deals are already either close or by this point, because some of the statistics are about half a year in. Now, they probably already surpassed total, annual numbers over the last number of years. And even deals, sort of a rung below that, bigger deals are also running at a pace. And there are fewer statistics on smaller deals, but based upon everything I see, I mean, certainly anecdotally for us, we're seeing more and more deals that are going on now. So, it's an interesting time to be a deal lawyer, to be a deal podcaster, to have this focus. I think the challenge, and I've talked about this, the challenge in these times often for buyers is deal discipline. And is there a point that's going to come? I said that, for example, in the wealth management segment, there are some folks that are getting multiples that are twice what they historically, would have gotten, and in some cases even more. Is that something that's going to come back to haunt buyers, right? We've seen it in other cycles where at the end of the cycle, people overpay, whether that's in companies, you see it in real estate. So only time will tell on whether the need to deploy capital and the competition for good deals and the pace at which some of these companies are growing, is going to give them the kind of returns that they want in the future. But certainly on a seller side, it's an amazing time. Now, it's always interesting. I started to get into this a little earlier. Just that fundamental decision, right? Because obviously, listen, if you're near retirement, if you're looking, if you would have sold in the next year or two, sure. I mean, why wouldn't you accelerate the deal now for capital gains reasons, for multiple reasons? Who knows how long those valuations are going to stay around? Or if you're younger and you're looking to latch on, like I talked about that one place where they think they have a bigger, or two of them they're working on now, where they think they have a bigger opportunity, latching onto a bigger shop for growth. All right, that's easy. But what if you are very happy with running your business, your firm? Things are doing well, it's running off nice cash flow. It's a lot of money you can get to sell it, but you might have another 10 or 20 or 30 or 25 years, whatever it is in you. Do you sell? And that's a very, very interesting and tough decision. I can tell you examples. I remember a guy, a client of ours many, many years ago, probably, I don't know, 25 plus years ago, who we were in a cycle where his recruiting company, he recruited a lot of IT folks, mainly for big financial service companies and investment banks, that kind of stuff, brokers. And he was killing it. And he got an absurd offer on like multiples were like they are now. But he was a young guy, I don't even think he was 40. And he was like, why should I sell? And I understood the decision. However, multiples dropped. Wall Street went through a series of time where they brought a lot of that tech people in-house. They go through cycles where they outsource, they hire, they outsource. They went through a hiring cycle, and his business really struggled. after that. So, in hindsight, he probably should have sold, but who knows? It's easy to say, things in hindsight. So, the entrepreneurs out there, the business owners out there who are looking, who weren't naturally thinking about selling, but maybe now are considering it, or should at least look to consider it, as to whether they should sell, despite the fact that they have a much longer runway in their career. I always say this: listen, take a step back, right? First of all, make sure that that your identity isn't so tied up in your business that you're not selling for that reason. Okay. And there are a lot of good reasons not to sell, but too many entrepreneurs, especially, have their whole identity tied up in their business, and then they can't sort of think, see things clearly. They'll say things like, what am I going to do if I sell my company? But what they really mean is, who am I going to be if I'm not the CEO, if I'm not the owner, if I'm not the founder of XYZ company? And if it's a being conversation, then I would encourage you to to look at some other things. I was just interviewed. Since I'm recording this, it'll come out probably in a month or so from when I'm recording it. But so by the time this comes out, it'll probably be 3 weeks later than what I'm about to say was released. But I was just interviewed on the Better Business, Better Life Summit, for the Better Business, Better Life Summit by Dr. Sabrina Starling. And we were talking about creating your ideal life now, right? And doing visioning processes to look at what you really want to create. And so it'd be interesting, you can look that up and listen to that, or subscribe to that summit and hear that. But, the point is, too many, it's amazing to me how many entrepreneurs start businesses to get away from bosses, right, and run their own thing or whatever. And then they get so tied into what they created that it runs their life. I think there's an opportunity to look at whether your business is tied to your identity and whether that's preventing you from making an objective business decision. Now, listen, I'm not saying you have to sell. And I'm not, just because we do deals, I'm not pushing deals. Fortunately, we are very, very busy and have been for a while. But the point is that, to at least consider the opportunity now, because listen, you're going to be under, a restrictive covenant, non-compete for a while if you sell your business. But doesn't mean you can't start something in a different industry. You may have to stay on as an employee or consultant for a little while. That might not be as palatable as an entrepreneur. But after that, you can start a different business, after the restrictive covenant period is up, which is often, let's say, 5 years. You could even potentially start a business in the same industry. So it's something to be considered. Maybe it's an opportunity for you to travel around the world. And at the same time, if you really, from a pure place, from a vision of what your life, what you want your life to be like, and from a vision of what you think you can do with your business if you don't sell it, come to a clear conclusion that it's not the right time for you, then the fact that the market is heated up and there's all kinds of money, and the fact that you might get these big multiples should be, enough of a reason to sell, right? I mean, there are monetary, the ability to monetize a business, to create enterprise value and monetize it, is one of the great things in a lot of industries about becoming a business owner or an entrepreneur, of taking that risk. But it's not the only thing, right? The other thing is, if you're running a business that you love and it creates the freedom you want. I mean, in that summit, I mentioned, we talked about Ideal Life Now, and I've talked about Ideal Life Now on this podcast. I love my business and I work to create my ideal life now. I work to have time to contribute and make the impact I want in the various causes that I'm involved in. I make time to travel, which is something that I love. I, spend time with my family, live in a place that I love to live. I mean, I look to the left because I have a view out to the marina and Marina del Rey here, where we're right, view of the water right here. So I design my life in a way where I have an ideal life now. If I'm running a business that, let's say I got an offer, and I'm loving my life and making good money, and I'm energized and motivated by what I do and helping my clients and whatever, if you're in that position, you don't have to sell, but I think it's worthwhile evaluating it, especially in a market like this. And then looking at, from a very pure place, what is the life you want to create? And at least considering the possibility of, what would be your life without your business? What would be the opportunities if you did sell it in a market like this, right? For you, for your family, for your friends, for your lifestyle, what kind of ideal life could you create without it? And then compare it to your ideal life with the business, and then make a decision. One of the things on the sell side is that, at least, in this market, it creates options, it creates opportunities. And whenever options and opportunities, I always believe that people should at least consider them, right? And then, make a conscious decision and respect that inner truth that they have that tells them whether they should or they shouldn't, as opposed to it being, influenced by external forces, whether that is being too identified with your business, or whether that is, on the flip side, getting hung up on chasing that big money, right? But really, maybe you'll be miserable, after you sell. Listen, I've had some folks on the podcast who've talked about the reasons they haven't decided to sell, and that, where other folks on the, they knew who sell were actually had second guessed their decision, right? They had regrets. But then, interestingly, some of them have subsequently chosen to sell because they've gotten to a different place in their life, or maybe there was a different opportunity. So you just want to be able to evaluate that objectively as you can, either way. And the other thing, I do a lot is visioning, right? So when I talk about an ideal life now, that's why I say create a vision of what it would be if you sold your company, if you didn't sell your company. At least have those options on the table. So listen, as long as the market is strong, folks, we have options. It does create a little bit more of a challenge if you're on the buy side, right? Because multiples are higher. It's harder to compete, especially if you're a smaller company, especially if you're not funded. But then maybe, first of all, don't assume you can't compete, because you can't compete on money or price, but that's not what motivates everybody, right? You might have other opportunities within your business where you can buy somebody for less money, or even, bring them in on a revenue share or an equity deal where you don't have to put up cash, because you have other things you can bring to the table, whether it's the culture, the environment, the future opportunity, the ability for them to be an owner. Some people might not be looking to cash out right now. They may be looking to combine and get equity in something that could be bigger over time. So even on M&A deals, you still have an opportunity in a expensive market to potentially be a buyer. And then also remember, although this particular episode and some of our other episodes are about M&A, as if you've listened to any of this podcast, you understand that M&A deals is only one type of deal, and it is a tiny portion of all the other types of deals you can potentially do: strategic alliances, joint ventures, affiliate arrangements, distribution arrangements, joint marketing arrangements, licensing deals, business partnerships, acqui-hires, you name it, right? So because the M&A market might be overheated, and maybe you're priced out of it, at least certain aspects of it, doesn't mean that it's not other types of deals that you can do, in this environment on the incoming side, the quote unquote buy side, although the deal, if it's not M&A, may not be a buy, it might be a license or a joint venture. So in every market, there's opportunities to look at deals. One of the things, as you know, on this podcast is I'm always encouraging you just to have it on the menu as another alternative, in addition to the organic growth that you are focused on, right? Sales and marketing, providing great products and services, getting clients and customers organically. In addition, always look at the deal landscape right now, very, very, very seller friendly, strong seller market. So at least take a look at it. And see if that's an opportunity that you want to take. And if not, then even that process of making that decision, of doing that visioning of what your ideal life would be without the company, or after you sell the company, or with the company, I think will help you even if you decide not to sell. It may have you reevaluate certain things. It may have you look at the business differently. It may have you say, you know what, I love my business in so many ways, but this one thing is the thing that was the trigger that had me think, that in addition to, the opportunity and the valuations, the thing that's driving me away from my business. So maybe I don't want that ultimately, because there's so much else I like and there's so much other opportunity that I don't want that thing to drive me away. So I'm not going to sell my business, but it's given me a focus to know I got to solve that. I got to figure out another way to deal with that. I got to hire some people. I got to put in a better system. I've got to maybe do a different type of deal that will resolve for that frustration and that issue that had me at least think about selling my business. So the process of considering it is valuable, even if you don't do it. So listen, options, consider them. That's my biggest thing, right? Put it on the table, see where it brings you. Hopefully it'll help you get clarity and benefit you either way. And with that, I'm going to say goodbye for this week. Tune in next week for an episode that I'll have with a guest, and then in a month from now, we basically do, as many who watch the show, every fourth episode tends to be a solo cast. So I'll be back with you then with a solo cast. But check out our great guests we're going to have in between. Corey Kupfer, thanks, folks, for listening. Thank you for joining me on this episode of Deal Quest, where we help you understand how deal-driven growth can be your ticket to freedom. I want to invite you to a unique way to tap into the wisdom and experience of the DealQuest community. Join the DealQuest Deal Den Zoom calls, a free monthly 90-minute mastermind. In the mastermind, we address all the challenges you may be facing and help support you with the opportunities that may arise in terms of deal-driven growth. You will get input not only from me, but all the members on the call will collaborate and serve each other in a mastermind format. To sign up for the free mastermind, go to www.coreykupfer.com/dealden. That's coreykupfer.com/dealden. I'll see you there. I'm Corey Kupfer. Until next week, wishing you the freedom and financial prosperity that I know your Deal Quest will bring.